Good afternoon, all. CamelbackTrading.org coming to you this Wednesday afternoon, January 27th. We're looking at the SPY ETF's market profile here on Window Trader. And wild day. Not a good day for me. Did a couple things stupid. One I got very lucky on. Another one didn't get lucky on. Would have made it all back and more if I stuck to my guns and got back into trading. I did not. Confidence got rocked a little bit. Very weird day for Fed day as we gap lower and have an open and drive down. I'll get to everything in a second. I'm just going to go over Russell and triple Qs first, and then we'll talk about everything that transpired here in ES SPY and why the market did this. So here's the Russell. They also gapped lower. Remember, they had a sizable balance. 9-day balance and 8-day balance. So why did I say, well, I don't know, 8-day balance. I thought it was a 10-day balance earlier. But anyway, we opened, got below it, did not really stay below it, came back in, and then the Russell tried its hardest to get back. I mean, well, it succeeded. It actually closed its gap, but failed at M's low from yesterday. And then late in the day, as you can see, just reverses, doesn't get up the day's low. The only thing they have to lean on is an 8-wide POC. I like 9 or better, and the high and low of the day. And they close basically at the bottom of this 8-day balance. Excuse me. So we'll see how that works out for them tomorrow. Triple Qs. Triple Qs were a spitting image of us. As you can see, it's selling off pretty hard here. I know Facebook earnings came out, and I don't think it did too well. Facebook was down. Just looking to see if Tesla came out or anything. I'm not sure if Tesla. Yeah, Tesla must have came out. It looks like it's $25 or $30 lower from its low of the regular trading hours. Apple doesn't come out, I believe, to 4:30, so we're going to see what happens when Apple comes out. But as you can see in the triple Qs, it's ripping to new lows. It went out with a price probe. It held a set of single prints just like we did. So we were very similar to the triple Qs today. And they also took out the bottom of a 4-day balance, filled their gap from the 19th. Actually, they didn't fill their gap. I take that back. They never filled it in regular trading hours. They're filling it now in end period. I will not count that. So their gap is still holding from the 19th as far as I'm concerned. Now, for SPY and ES, as you can see, we're making new lows here in end period. And we're going to go test probably the 50-day moving average, which is just above 370. So what happened today? We gapped lower. We made a new all-time high yesterday. I was surprised we gapped high yesterday with the Fed today. And then we ended up doing what I thought we would do, which was basically trade inside yesterday's range, and not much happened. So what happened today? Why did we gap low and drive down, get an afternoon rally high, and then flush out again? Well, from what I'm understanding, is because a lot of these market makers are getting hammered with these short positions in these retail stocks, they have to be selling, obviously, other things to raise some cash to start paying off what's going on. So incredibly, this retail trader is having a big effect on this market. If you look at some of these stocks today, AMC up 300%, Express up 200%, GameStop 135%, KOSS up almost 500% today. So they're pretty much doing to the big boys what the big boys have done to everybody all the time. Now, you know there's going to be all kind of hell about this. How this is wrong, how this is that. I don't see anything wrong with it. I really don't. Again, we can't have it both ways. If the big boys are allowed to do what they can do, the little guys should be able to too. So I have no problem what's going on. The only problem I have is we shouldn't be halting this trading. Forget these trading halts. Everything's electronic. There are no technical specialists or that anymore. So everything's electronic. There's no reason for these markets to stop. If they want to have these stocks being manipulated by both retail traders, the Fed, the Treasury, hedge funds, well, then they should accept the result of it and let the markets keep trading. You're never going to find an the market get its own equilibrium by what you're allowing to happen. So they shouldn't allow trading to be halted at any point, at any time. So that's a big reason why this market did what it did today. The Fed had nothing to do with this market. They left rates unchanged. They didn't say anything in their language that would suggest otherwise. So all this is really the retail boys gaining the system and really taking it to the big boys right now. So you got to love it. Now, as far as my day, it started off on a good note, although the first trade I took, I was more lucky than good. I took a long and A period when we drove straight down against the 5-day balance low, because initially I didn't know what was going on. I didn't realize. Who would ever think that some of these big funds have to raise cash because of what's going on in these stocks that they're absolutely sending through the roof for no reason? So when we got to the bottom of the balance, I took a long. Where I was wrong is not getting out. And I actually added huge size at A's low as we got closer to the 15th low. But also, I was like, we didn't have one on this drive down from 380 and change down. We didn't have one time where this market really pushed back at all. So I basically threw all my cards on the table, and I got very fortunate in A period, because where I threw in the huge call play, we rallied and got it all back and more. So I should have learned from that. What happened after that, I started trading small. I actually took a short in C period against the opening. Those were 382 puts, and I traded everything that expired today. So I made okay on those. I took a long in D, a small one. 377 calls. I said, if we take out C's low, I'm out. And I did. So here's a trade that wrecked me. Market starts pushing down pretty good. We had a buy tail. I'm like, okay, we're 5 for 5 wide now. And I should have realized that, because I actually took the opposite trade. But when F took out E's low, I'm like, we're one time framing down now, D, E, and F. We should at least test the day's low and see what's below there and take out the IB low. We already got the overnight low, so I started a put play. And I started pretty good. And then what happened? It ran up and it ran up. And I actually took really big size. I was out big. It came in enough. Where when I finally took it off, I got back half of what I was down. But basically, I went and gave back. At one point, I had given back my whole month, which I worked very hard for, and more. When I finally put it to bed, I gave back half my month. I'm like, okay, I'm still green on the month. I'm taking it off. It was a poor trade. It wasn't the wrong trade to take initially, but I should have had an out. And really, I didn't have an out until really G took out F's high, when you think about it. So the trade itself wasn't poor. I should have used maybe B's low as my out, something, but I didn't. Now, was I right? And as you can see, eventually I was. So what happened after that? G goes up, H goes up, and I tell the room, now this is right before 2 o'clock, basically, right? H period. I'm like, he's speaking soon. I said, on a normal day, that's a beautiful afternoon rally high. We have a gap. We have lower value. I'm like, that's a textbook afternoon rally high. But I don't want to do it because, Jay Powell is speaking, announcing. Well, guess what? That turned out to be not an incredible afternoon rally high. Even if you didn't take it at H, if you took it at I. But again, he's starting to speak and everything else. Yeah, we're still one time framing down, but I don't know what's going to transpire. He didn't say anything negative We didn't do anything with the rates, and we continued to go down. And then we finally got what I was looking for in F. As change took place, K took out A's low, and we flushed. Now, I didn't do anything. I took 2 small scalp shorts in L and M just to get my feet wet, because obviously I was kind of banged up confidence-wise. Now, another play I missed, and I told the room, was M's low. I said, well, if we get to the 50-day moving average in M, I'm going to take one against it. But I also said we have single prints from the 6th. I said we probably might get some responsive buying if we get them. Well, we did get them and go 40 cents lower, but we rallied $2 off of them. And again, I didn't take a play. That's what happens. When you do silly things, it keeps you out of other plays. So, net, not a good day. Understood what I did, have to work on it, and we get back on the horse tomorrow. So, because if I had gotten out of that trade in F for not that big a loss, I might have taken it again in H, or I might have taken it again in I and done well on it, right? So say this loss wasn't that big, and then I did okay and got everything back. Not only that, maybe I would have been more apt to take that trade again, right? If I got out of F's trade because I knew I was wrong, well, I could do it again in K, and if it takes, once it takes out A's low, if we come back in, okay, if you're wrong, Paul, you get out. Well, guess what? I never would have been wrong this time. KLM. So, again, the room is for teaching, not for piggybacking. And I walked, believe me, my room knew exactly what was going on my long in A, my short in F, and walked them all through it and told them why it was wrong, you know, what I did, what I should have done. So, again, the experience alone of what we offer here is invaluable. Okay. Destinations for tomorrow. Upside. Well, we went out with a price probe. L's low. And remember yesterday's price probe? Boy, was that accepted. 2 cents worth, but boy, was it accepted. So L's low of 373.12 is my first upside destination. Then we have the single prints. They start at 375.18, get filled at 63. A's low. There's only 45 cents left. They were 150 at least when it started. Then we have 9 wide. D's low at 377.94. That's another little nuance. We could have gone down $100 from here, and the POC would never have gotten lowered from D's low. It got lowered from C to D's low, but that's not a lot. So it's a little nuance how price kept going down, but we never lowered POC. We couldn't. So 377.94. Then we have that beautiful afternoon rally high in H, 378.89. And then today's high of 380.22. And filling the gap at 383.54, a 322-point gap. For the downside. Now remember I said yesterday, or the last bunch of days, how wide and far our downside destinations were? You don't think that means something when we're free falling? It certainly does. So 372.01, today's low. Below that, we don't have anything to 369.12, daily low. 368.05 daily low, and 364.82, which right now is a weekly low, but would be a monthly low if we don't get it. And then 362.03, which is last month's low. Very, very important levels we might get to, and those destinations again are far and wide apart. I know this is a long video, but boy, if you learn anything from it, it's worth it, right? Let's go to the charts. Monthly. We are one time framing up for 3 months out of an inside month. So it's still healthy. Are we inside last month's range? Well, we closed at 374.41. Last month's high is 374.66. So right on the cusp of it. So in the monthly, in the longest time frame, there's no damage just yet. So that's the good news. What's the bad news? Well, right now the weekly stopped one time framing up, took out 2 weekly lows, but more important than that is right now with 2 days to go, we're below last week's low. So remember a bunch of weeks ago we had an outside week up? which is very positive. Now, we didn't do much with that. We actually had an inside week the following week. Now, after that, we made all-time highs, but we didn't do much with that outside week up. We did eventually hit new highs, but it didn't get the acceleration the following week that you would have wanted. But that doesn't mean we won't get it if we close below last week's low and have an outside week down. Now, anything can happen in this market. We can have an outside week down. We can end up coming back and having an outside week up. Or we can close inside last week's range. But if we do have an outside week down, that's bearish. But we are in a 4-week balance. What's the bottom of that balance? This month's low right now. Keep that in mind. And then on the daily, we came out of a 5-day balance down for today. I am calling it down. So the monthly's up, the weekly is balanced, the daily is down. Would I be surprised if we test the 50-day moving average? No, I would not. We are firmly entrenched in a bunch of, right? We had a lot of different balances. We had a 7-day balance here. We had an 8-day balance here. We had a 5-day balance here. Well, think about what we did. We wiped out 13 days worth of work in one day. Think about that. Almost 14. We didn't get to 3. Just take a second and think about how vicious this market can be when it wants to be. We took out 13 days worth of work in one day. So I am firmly in the corner of these retail traders, what they're doing in GME and all those stocks. But keep in mind, those stocks shouldn't be trading where they are. Okay? I know valuations, I know earnings mean nothing. But we're not talking about something that's $10 above maybe where you think it should be trading. We're talking about a company that's bankrupt, that's trading at $350 a share. So I hope they enjoy this ride in all these stocks, and I hope they do well in them. But remember, at some point, and I don't know when it will be, but at some point, those stocks are going to trade where they should be trading based on some kind of actual valuations and metrics and earnings and blah, blah, blah. For now, though, let them run it as much as they can. I have no problem with that. I hope you all had a good day trading. Have a great evening, and we'll speak prior to the opening tomorrow.